For the first time in years, San Francisco buyers came back with confidence, and the numbers from 2025 prove it. Hey everyone, my name is Alex Epstein. I'm a lifelong San Franciscan I'm a lifelong San Franciscan and realtor here in the city. In today's video, I'll be giving you a market update on what's actually going on in San Francisco at the start of 2026. By the way, if you're thinking about buying, selling, investing, or even leasing your property here in San Francisco or a nearby area, I'd be more than happy to be a resource for you and help. Please reach out to me at the contact information below. If you're looking for ongoing specific market updates for San Francisco, please make sure you're subscribed. And with that being said, let's get into the video. In this video, I'm going to walk you through what drove demand. What is demand? It's demand. Oh my God, okay. In this video, I'm going to walk you through what drove demand in 2025, pricing and competition trends, how single-family homes compare to condos, what inventory looked like, how interest rates played a factor, and what January is telling us about the 2026 market. 1. Why San Francisco regained momentum in 2025. San Francisco's rebound was driven based on economics, not just hype. We all know about the effects of AI. It was everywhere last year and it has blown up. Many people use it on a day-to-day basis, and that has led into a huge influx of capital in San Francisco. Not only because San Francisco serves at the heart for AI and innovation, but also because a lot of those businesses open offices in San Francisco, meaning that a lot of people employed in AI reside here in the city and have brought a lot of capital to the market. Beyond than just affecting the job market, it has affected capital. Pre-IPO liquidity has returned, and there has been a huge surge in venture capital. This has led to the improvement of office attendance and downtown foot traffic. It has also helped out with unemployment, which has fell to 3.7%. What changed in 2025 was consumer confidence. AI investment capital has created real income and real buyers, not just speculation. Specifically in San Francisco, we have seen that buyer confidence has risen faster than other markets nationally. San Francisco outperformed many US markets and demand was pulled forward into the fall. All in all, I would describe this as buyer psychology being reset heading into 2026. 2. Single-family homes. Speed, competition, and pricing power. Single-family homes continue to remain highly competitive. The median price rose to just over $1.7 million, which is a 4.7% year-over-year increase. Median days on market dropped to 13, meaning that single-family homes in the area are selling faster than before. Another key statistic that blows my mind is that over 75% of homes sold have sold over asking. This is a clear indication that when you're buying a property, you should not be expecting to pay list price. Further proving the point, sellers averaged 113% of asking price. When 3 out of 4 homes sell over asking price, that tells you that buyers out there are willing to compete and move quickly. Specifically, I should note that turnkey homes perform the best. Also, location and layout matter more than ever. Buyers tended to pay premiums for certainty. Number 3. Why the condo market had the strongest turnaround. Condos quietly had their best year in a long time. Sales increased 11.4% year over year. Contracts rose 10.3%. Median condo prices rose to 1.15 million, signifying a 2.2% increase. Days on market fell to 28 days, and nearly 38% of all condos sold over asking price. We're seeing that as competition intensified for homes, buyers tended to pivot to condos. In the condo market, entry-level and move-up buyers led demand. Well-located condos regained momentum, and buyers became less hesitant about HOAs. This shift is important heading into 2026 because it broadens the buyer pool. By the way, if you're interested in the San Francisco market, are you paying more attention to single-family homes or condos? I'd be interested to know. Drop a comment down below and let me know. Number 4, inventory, the quiet driver of leverage. Low inventory increased competition across the board. Single-family inventory ended the year with only 77 homes. Condo inventory also declined meaningfully. Based on supply and demand, fewer inventory meant fewer buyer choices. Inventory is what truly determines leverage, not headlines or anything else. Sellers benefited from limited supply. Less supply means less competition, and less competition means higher prices and homes sold faster. Because of this, buyers had to act quickly. There was a ton of competition and not many homes available for sale, so if you like something, you have to move pretty fast. In our market, overpricing still punishes listings. This ties into what I said earlier about most homes going over list price. What tends to work the best in San Francisco is to list your home competitively meaning below even where you expect or want to sell the house, and getting a ton of interest and offers in order to come up with the highest price available. It is commonplace for agents to list the house under where they think it's going to sell to pent up demand. When supply stays tight and confidence returns, competition follows. Number 5, interest rates and buyer psychology. Stability matters more than rate cuts. Rates started in 2025 near 7%. Over time, they fell steadily to almost 6.15% by the end of the year. In our market, we saw that buyers adjusted much faster than expected. Once rates stabilized, buyers stopped waiting and started acting fast. Buyers tend to know that the payment matters more than the interest rate itself. Furthermore, confidence returned before affordability news improved. Rate stability gave buyers permission to move rather than rate drops. Number 6, neighborhood level reality. San Francisco was not one market, and each neighborhood acts independently from another. Some neighborhoods average 115 to 120+% of list price. Others tended to remain more balanced. We see that micro markets drove outcomes. For example, a condo downtown versus a single family home in the Sunset were playing by totally different rules. Neighborhood strategy mattered more than ever in 2025. Lastly, just to get into some local and practical insight, the biggest mistake I see people making is waiting for the headlines to say that everything is safe. By that point, you're too late. Everyone already knows because everyone else is reading those same headlines. You have to do what's best for you and your situation. And if you're ready to do something and it works out for you, that's the best time to do it. I tend to see the buyer urgency shows up before the actual headlines. The inventory on the market here tends to tighten quietly. So ultimately, I believe that strategy beats timing. January 2026 shows a San Francisco market that's competitive, active, and driven by real economic demand rather than just speculation. If you're thinking about buying, selling, investing, or even leasing here in San Francisco, please feel free to reach out to me. I'd be more than happy to be a resource for you. My contact information can be found at the information below. And if you want more San Francisco real estate content, nothing would show that more to me than if you could subscribe. And if you wouldn't mind leaving a comment below based on the question I asked you earlier and like this video, that would mean the world to me. Thanks, and see you in the next one.